It's hard to overstate how big and fast of a drop this is for the US dollar. The value of the dollar affects everything from the price of an iPhone when sold overseas to how much you're going to have to pay for that summer trip to Europe.
This story is about the global community losing its confidence in the US dollar and quietly quitting US assets, but this administration doesn't seem to mind it.
The dollar had its biggest drop since US President Donald Trump unveiled his universal tariffs last April.
Donald Trump imposes the steepest US import levies in a century, with China facing a tariff of more than 50%. The dollar is also weaker.
The dollar fell in a really big way against major peers: the yen, the euro, the pound, the Swiss franc. This chart over the past month shows just how stark the dollar's drop has been so far this year. The vast majority of days, the moves are very slightly up or very slightly down. But on January 27th, the dollar fell 1.1%. That large of a move accounts for about 1% of all days.
To understand the current dollar decline, we need to broaden the lens here a little bit because it is coming off very strong levels. Even at the start of 2025, the Bloomberg Dollar Index was hovering at near the highest in at least 20 years.
The foreign exchange market, or FX market, is where investors buy, sell, and speculate on currency movements. The scale of the currency markets is massive. On average each day, some $9.5 trillion is traded in the currency markets.
Despite rising doubts about the dollar, it continues to be the world's dominant currency and has been so ever since World War II. It is the most used in global trade, foreign transaction, the FS market, and it also accounts for the lion's share of global reserves held by central banks, even as that has come off a little bit in recent years.
A number of factors can affect the currency markets, but the primary force behind the dollar's fall right now is Trump. Fear has been fanned by Trump's unpredictable policymaking, including his threats to take over Greenland, political pressure on the Federal Reserve to lower interest rates, and tax cuts that have deepened the US deficit. Trump has indicated he's comfortable with the dollar's decline.
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great.
His remarks underscore the lingering risks and the risk that global investors will look elsewhere.
It's becoming clear that tariff threats are being used as a negotiating tool on nearly every front, not just trade, and that casts a shadow over the US economy at the time when growth is still fragile. If you look at the past 6 months or so, there has been little to no job growth in America, and that's largely believed to be the result of the trade war and the immigration crackdown.
The dollar's weakness has come despite a rise in Treasury yields and the Federal Reserve's reluctance to cut interest rates further.
For global investors who want to participate in US stocks or play the AI theme, they may now be emboldened to hedge more of their US dollar exposure given the dollar declines.
A prolonged and sharp weakening of the US dollar brings with it a number of dangers for the US economy. Trump in the past has made no secret of his desire for a softer dollar. A weaker dollar will boost American exports and promote American manufacturing. On the flip side, it makes imports more expensive for American consumers. It also comes at a time when there's sustained pressure on inflation from Trump's tariff policies. The US has about $38 trillion worth of debt, many of which is owed to foreign countries, and a weaker dollar makes it all the harder to pay off that debt. The best case scenario is that a gradually weaker dollar ultimately does help promote American growth and exports. The worst case scenario is that a sharply weaker dollar ultimately leads investors to question the merit of investing in the US. That could lead to capital flight.
Despite US stocks hitting record highs here recently, they've actually steeply underperformed global peers, and that suggests that investors don't have to sell America in order to hurt the dollar. They just have to buy less of it.
Trump's combative policymaking shows no signs of letting up. Still, not everyone's convinced that Trump's comments will lead to a long-term sell-off in the dollar. Major banks are telling investors to pull out and take profit on trades that wager on a weaker dollar.
We're already seeing the dollar rebound here a little bit, and that's likely to continue in the short run. After all, President Trump has already walked back some of those tariff threats, and the US economy appears to be improving. However, uncertainty will linger just because you never know when policy risks flare up again, and global investors will want to be protected against that. So we may be headed in this very unusual situation where the US economy does okay, the stock market is okay, the dollar not so much.
Bloomberg's reporting shows a real fear of de-dollarization among US and international investors. And while there's a lot of reasons behind that fear, it's also been proven it will take time to play out.